Yes, guys. So start noting down this example, everyone. Yes, Abir.
So, like in debentures, before debentures, we wrote like interest amount like 8%. And similarly, in the preference shares, we write certain number
Right.
before. So the number of before preference share is for the interest or is for the dividend amount, like the dividend first.
What do we pay to shareholders? Interest or dividend?
Dividend.
Then it would be dividend. Correct?
Yes, so for equity share holders, we changed time to time, but for preference shareholders, 5% or some like
Correct. Correct.
amount is.
Correct.
um,
After giving dividend
o-
to preference shareholders, whatsoever profit is available, that entirely is for equity shareholders, even though it is not distributed fully. But whatsoever is the profit left after giving dividend to preference shareholders, the remaining profits are for equity shareholders. They belong to equity shareholders, right?
Okay, sir.
So, guys, have you all noted down everything till here?
Yes,
Yes,
sir.
yes, sir.
Yes, sir.
Note down this, guys. Then, guys, have you noted down this part also?
Yes, sir.
Yes, sir.
Note down this, guys. I'm asking, guys.
Yes. So last point.
Akshita, Taman, what's about you?
Done, sir.
Done, sir.
Done, sir.
Okay, so, guys, in this question, I have tried to accommodate most of the adjustments that you find usually in different questions of cash flow statement. So let's start with note number one of share capital, where capital is decreasing by 1 lakh. So this is note number one, where there is no change in equity share capital, but preference share capital has decreased by rupees 1 lakh. We have also been given an additional information that preference shares were redeemed at a premium of 8% on 31st March 2019, that is at the end of the current year, for which we have to prepare cash flow statement. Correct, guys?
Yes, sir.
Now, to redeem preference shares at a premium, what we do, we debit preference share capital account, right? Like here, preference share capital is 5% preference share capital. So we'll debit 5% preference share capital. We will debit premium on redemption of preference shares. and we will credit bank account. This is how the journal entry is passed to redeem preference shares at a premium. We have redeemed preference shares of rupees 1 lakh. That is why preference share capital has become rupees 2 lakh from rupees 3 lakhs. And we have redeemed them at a premium of 8%. So capital is decreasing by 1 lakh, and on that we are paying premium at the rate of 8%. So 8% of 1 lakh is 8,000. It means total money going out from our pocket is 1 lakh 8,000. Is it clear, guys? But when we do so, because of this journal entry, this account arises in our books. Premium on redemption of preference shares, which was not there earlier in our books at all. Had this been in our books, it would have reflected in balance sheet, but in balance sheet it is not reflecting anywhere. It means this account has arisen in our books very first time. Right? Now, this account is written off using securities premium, and if we do not have securities premium, then we use statement of P&L to write it off. Now here we have also issued debentures at a premium of 5%. So you can see in balance sheet that debentures have increased by 1 lakh. They have become rupees 3 lakhs from rupees 2 lakhs. It means we have issued debentures having face value of rupees 1 lakh, and they have been issued at a premium of 5%. Correct? So 5% of 1 lakh is rupees 5,000. So we have now, with issue of debentures, we have now in our books securities premium credit balance of rupees 5,000, which was not there earlier in our books at all. You do not find here, we do not find here securities premium balance. So this balance has arisen in books during the year 1819, 2018-19, but it is not reflecting here. Why? Because this premium balance has been used to set off this premium. I hope you're understanding, guys.
Yes. Yes, sir.
So amount of securities premium arising in books due to issue of debentures having face value of rupees 1 lakh at a premium of 5% is 5% of 1 lakh, that is rupees 5,000. This premium we have used to set off this premium. However, premium on redemption of preference shares is more than the available credit balance in securities premium account. So, journal entry to write off premium on redemption of preference shares, in that case, which the company would have passed, is securities premium account debit, statement of profit and loss account debit to premium on redemption of preference shares account. We have used securities premium of rupees 1 lakh, which earlier had credit balance of rupees 5,000 because of issue of debentures at a premium of 5%. So that securities premium we have debited here. However, the premium on redemption of preference shares that we have to write off is rupees 8,000. That is this one. So for the balance, the remaining 3,000, we will use statement of P&L. Now, why I have passed these entries, guys, to make you understand that this 3,000 has gone to our P&L and has decreased our profits. It has gone on the debit side of P&L, so it has decreased our profits. So to determine cash flow from operating activities, we will add back this item to profit before tax because it has decreased our profits, though there is no flow of cash on account of this. It is a non-cash item. The actual cash that has gone from our pocket is 1,08,000 and that we will show under financing activities. So tell me guys, have you all understood this part or not?
Yes, sir.
Yes. Yes, sir. Yes, sir.
Abir, have you got this?
At the time of debentures, generally we make a separate account for the premium to loss on premium audit.
Yeah, that we do when we have to redeem debentures. Here we are not talking about redemption of debentures, we are talking about redemption of preference shares. In that case, we do not do so. Right, Abir?
Uh, so, sir, the amount we transfer in the bank account of this,
Sorry?
the amount of redemption is also then transferred to bank.
It has already been paid. 1,08,000.
But in case of debenture, it's not so.
No, there also it is so. We debit debentures account, we debit premium on redemption of debentures account, and we create bank account. When you issue debentures which are redeemable at a premium, at the time of issue, what do? We debit
Uh,
debenture application and allotment account, we debit loss on issue of debentures account, we credit debentures account, and we credit premium on redemption of debentures account. It means
yes, so
that premium we already have trade balance. The same premium at the time of redemption is debited. And this is how that this account automatically gets cancelled because before this entry of redemption, we already had premium as credit balance. And now that is being debited here, so it is getting automatically cancelled. But in case of redemption of preference shares at a premium, since we do not do the same thing what we do while issuing debentures, that is why this account comes in our books and has to be written off, for which we have passed this journal entry. In case of debentures, we do not need to write off this account because it automatically gets nullified while redeeming debentures at a premium. Understood?
yes, sir.
Sure?
Yes, sir.
Okay. So we have talked about guys share capital. Now about equity share capital, we have also been given one point about declaration and payment of dividend on equity shares at the rate of 8%. Means during the accounting year 18-19 for which we have to prepare CFS, dividend at the rate of 8% on equity shares was declared and paid. Now we will apply this 8% on which equity share? On the equity share balance of previous year. That is at the end of accounting year 17-18 and that was 4,50,000. Though for the so guys, what I was telling is that the 8% dividend would be applied on the equity share capital balance as at the end of previous year. Although here, for the current year and for the previous year, the share capital balance is same. But had they not been same, that 8% you would have applied on this amount and not on this amount. You know the reason, guys. Now, since they have declared and paid dividend on equity share capital, and you know that before equity share capital, dividend is paid to preference shareholders, it means they have also appropriated and paid dividend to preference shareholders, even though it is not mentioned in the question. Preference shareholders were redeemed by the end of the current year. So at the beginning of the year, they were 3 lakhs, and till this date, they were 3 lakhs only. On 31st March only, they have redeemed the preference shares of 1 lakh, and because of that, on 31st March, the balance of preference share capital is 2 lakhs. It means that preference shares of 1 lakh which have been redeemed, they remained in the business till 31st March 2019. So on this entire 3 lakhs capital, we have to appropriate and pay dividend at the rate of 5%. Clear, guys? So dividend appropriated and paid to preference shareholders is 5% of 3 lakhs, that is 15,000. And dividend appropriated and paid to equity shareholders is 8% of rupees 4,50,000. That is rupees 36,000. Is it clear, guys, or not to you all?
Yes, sir.
Yes, sir.
Yes.
Yes, sir.
Okay. Now, so we are done with this part, guys. We have also seen its adjustment given to us here and here. Now, reserves and surplus. In general reserve, they have transferred during the accounting year in 1819 rupees 30,000. And because of that, general reserve balance has increased by 30,000. Correct?
Yes, sir.
We have also been given balances of provision for tax account. Opening balance was 9,000 and closing balance is 7,000. And tax provided for the accounting year 1819 is also given to us 5,000. So let's first make provision for tax account in our working notes so that we could know the amount of tax paid during the year 1890. So opening balance was rupees 9,000, closing balance is rupees 7,000, and tax provided is 5,000, right? Opening 9, closing 7, and tax provided is 5,000. So with this, total of credit side is 14,000. The same we will write on the debit side. 14 minus 7 is 7. It means this is the amount of tax that we have paid during the year. Clear to everyone, guys? And not this one,
Yes,
because
yes.
this amount was given to us. That's 5,000 is given to us. So the balancing figure, the amount that we have determined is 7,000, which denotes payment of tax during the year 2018-19. Okay. So now we determine profit before tax for the year, for which I am copying this format from our yesterday's question. Balance statement of P&L as at 31st March 2019. That is at the end of the current accounting year. And that is rupees 2 lakhs. Balance in statement of P&L. To this we will add transfer to general reserve, and that is rupees 30,000. So here we will have 2 lakhs transfer to general reserve. From 120, general reserve has become 150. It means we have transferred 30,000. I should rather do this other way around, 150 minus 120. This one, right? Then dividend appropriated for preference shareholders 15,000 and dividend appropriated for equity shareholders is 36,000. That also would be added. So dividend appropriated for preference shareholders and dividend appropriated for equity shareholders 15,000, 30,000 respectively. So total of this is 230, 245 and 2,81,000. From this we'll subtract balance statement of P&L as at 31st March 2018. And that balance given to us is in negative. Balance statement of P&L as at 31st March 2018. 1 lakh negative. So here we will write 1 lakh in negative. So 281 minus 1 lakh means 281 plus 1 lakh, that is 3 lakh 81. This is the profit after tax for the year 1819. To this we will add tax provided for the year 1819, and that amount was already given to us in the question, and that is rupees 5,000, which has gone to the debit side of P&L. It means profit before tax for the year 1819 is 3,86,000. Have you understood this, guys, or not? Everyone?
Yes, sir.
Yes. Yes.
Okay. So we are done with this part also, guys. That is this part. Now we have long-term borrowings in which we have debentures. Earlier they were of 2 lakhs, later they became 3 lakhs, means we have issued debentures, and debentures were issued on 1st October 2018. So till 30th September 2018, before before issue of additional debentures, we had debentures of rupees 2 lakh. So on these 2 lakh, we have to pay interest at the rate of 8% for first 6 months, that is from 1st April 2018 till 30th September 2018. And after that, on 1st October, since debentures became 3 lakhs, on 3 lakhs we will pay interest at the rate of 8% for remaining 6 months. So we are calculating here interest payable on debentures or interest expense of debentures, what shall you call it, for 2018-19 is on 2 lakhs at the rate of 8% for 6 months plus on 3 lakhs at the rate of 8% for 6 months. So 16,000 divided by 2 is 8,000 and 24,000 divided by 2 is 12,000. This gives us total amount of interest payable during the year 20,000. Since it is the expense for the year 1819, this amount of 20,000 has gone to P&L and has decreased the profits, though it is a non-operating item. Why? Because it is a financing item. But in balance sheet, guys, under other current liabilities, we have also been given interest accrued and due on debentures. This is coming under liabilities, means this is the amount of amount of interest on debentures which has not been paid. So by the end of the previous year, interest not paid on debentures was 4,000. During the year Total interest payable is 20,000. That is the interest of accounting year 1819 only. So 20 plus 4, 24 is payable. But at the end of the year, we found that only 8,000 is payable. It means out of 24, 8,000 is not paid. So how much is paid is 24 minus 8, that is 16,000. So interest paid during the year 1819 on debentures is opening balance plus interest of the current year minus closing balance of accrued interest. So this gives us 16,000. So this much interest we have paid. This will go under financing activity as an outflow. This will go under operating activities and would be added to profit before tax. I hope guys you understand this. If you have any doubt, you
Yes.
can ask guys.
No, sir.
Taman, Akshita, Anna, I hope it's clear.
Yes.
Yes. Yes.
Okay. So we are done with this part also. This part also we are done with. Now we have been given notes to accounts of tangible assets. Note number 3. Here we have land and building. Earlier its balance was 4,03,500 and now its balance is 383,500. Though during the year there is no purchase nor sale of land and building. So without sale, without purchase, the value of land and building has decreased. It means the amount of decrease represents depreciation on building. And that is rupees 20,000. 4,03,500 minus 383,500 is 20,000. So this we will directly show on the face of cash flow statement. Amount of depreciation on building. Now the next item is plant and machinery of which for which they also maintain accumulated depreciation account. Opening balance of plant and machinery was 5 lakhs, closing is 530. Opening accumulated depreciation balance is 1 lakh and closing is 1,80,000. And during the year, a machine with a written down value means with WDV rupees 35,000 was sold for rupees 50,000. And how much is the total depreciation charge on this building so far is 55,000. We know that written down value is determined as original cost or acquisition cost minus accumulated depreciation. That gives us WDV. It means WDV plus accumulated depreciation gives us original cost of machinery. So original cost of machinery is 35 plus 55, that is 90,000. So 90 minus 55 gives us 35 and machinery with WDV of 35 was sold for rupees 50,000. It means there is a profit of 15,000 on sale of machinery. So let's make plant and machinery account and its accumulated depreciation account in our working notes, guys. Again, I am copying it from one of the previous questions, so that I do not need to make it again, only the format part. Okay, so opening balance of plant and machinery is 5 lakhs and closing balance is 5 lakh 30,000. Opening balance of accumulated depreciation is 1 lakh and closing balance is 1 lakh 80,000. So let's put these values first. Now during the year we have sold a machinery for rupees 50,000 on which total depreciation charge so far was 55. So this 55 would be removed from accumulated depreciation account and would be transferred to plant and machinery account. So 55 we will debit here plant and machinery account. This 55 will come on the credit side of plant and machinery account. Sale amount is 50,000. Machines WDV is 35,000 written down value. It means profit is of rupees 15,000. 50 minus 35, 15,000. So this 15,000 profit will come on the debit side of plant and machinery account and has gone on the credit side of profit and loss account. Now you can see that guys, the total amount with which we have created plant and machinery account is 1 lakh 5 and the same account has been debited with 15,000. So 1 lakh 5 minus 15 is 90,000 and 90,000 is nothing but the original cost of the machinery. How? 35 plus 55 is 90,000, right? So now we will balance accumulated depreciation account first. Debit side is more than the credit side and its total is 2 lakh 35. The same we will write on the credit side. It means the amount of depreciation charged on plant and machinery during the accounting year 18-19 is 2 lakh 35 minus 1 lakh, that is 1 lakh 35,000. So this will go to cash flow under operating activities and would be added to profit before tax. Now we will balance this account. Credit side is more than the debit side. So we will do the total of credit side and that is 1 lakh 5 plus 530 means 6 lakh 35,000. The same amount we will write on the debit side and from this amount we will subtract 5 lakh 15. So this will give us an amount of 1 lakh 20,000. And this is the balancing figure denotes purchase of new plant and machinery. Clear guys, everyone so far?
Yes, sir.
I'm asking everyone guys.
Yes.
Akshita, Taman, Abir.
Sir, I don't have confusion.
Yeah,
Sir, if the amount is already we have given like WDV, then why we have written accumulated depreciation in the plant and
because they are maintaining accumulated depreciation account. Had they not been maintaining, then we would have directly created here WDV of the machinery. But since they are maintaining this account, total depreciation of the machinery which we have sold, that also will go to this account on the debit side and will come on the credit side of machinery. This is how we do the accounting, right?
yes, sir.
So guys, I hope you all have understood this part as well. Now, as far as intangible assets are concerned, here we have only one thing, goodwill, which is increasing by 1 lakh. We do not have any additional information about goodwill here. In that case, any increase in intangible asset is always considered as purchase of that asset during the year. So we have purchased during the year goodwill of rupees 1 lakh and that has caused outflow of cash. So this will come under investing activities as an outflow. After this, we have non-current investments. So this company, Aroma Limited, has invested in debentures of Tata Sons. Initially, there was no investment, but during the year, they have purchased 12% debentures of Tata Sons worth rupees 39,500. And on these debentures, interest is receivable at the rate of 12%. These debentures have been purchased on 1st July 2018. So from 1st July 2018 till 31st March 2019, we will calculate interest on these debentures at the rate of 12% per annum. And the amount of debentures, the face value of debentures is 39,500. right? So interest receivable on debentures of Tata Sons is 12% of 39,500. Sorry, 39,500 into 12% into 9 by 12. Why 9 by 12? Because we have purchased these debentures on 1st July 2018. So from 1st July 2018 till 31st March 2019, we have a period of 9 months. So for 9 months only, we have right to recover or receive interest on these debentures. So this amounts to 39,500 3,555. It means this is the income on account of interest on debentures of Tata Sons for Aroma Limited. So this amount would have gone to P&L and L and would have increased the profits. But since it is a non-operating item, we will subtract this interest from profit before tax under cash flow from operating activities. Now, in balance sheet, we also have one item about these interest, that is interest accrued on non-current investments. Initially, there was zero balance. Why? Because at the beginning or at the end of previous year, there was no debentures at all. But by the end of the year, there is accrued interest, means this much of interest we have not received from Tata Sons. So out of interest of 3,555, which we have just calculated, we have not received interest of 1,055. So interest received is 2,500. Interest received on debentures of Tata Sons is 3,555 minus 1,055, that is rupees 2,500. So this will go under investing activity. Is it clear to you all, guys?
Yes, sir.
Yes.
Yes, sir.
Yes, sir.
So, guys, these two items, that is this interest and this interest, are part of current liabilities and current assets respectively. But since they are not operating items, we will not consider them while determining cash flow or while determining working capital changes under cash flow from operating activities. So what I mean to say is that you know that under cash flow from operating activities, we also show flow of cash before and after changes in working capital, right? And there we show changes in items of working capital, that is changes in current assets and current liabilities. However, these two items, even though they are current liabilities and current assets respectively, but since they are not operating, they would not be considered there to present working capital changes. So what we will consider for working capital changes is trade payables from current liabilities and inventories and trade receivables from current assets. I hope you have understood, guys. You should keep this in mind till your final exam. That any item that you come across of current liability or current asset which does not belong to operating activity should not be considered to determine working capital changes. This we have discussed earlier also, guys, right? So we have discussed everything till here. Now here we do not need to discuss anything. This point also we have covered. Rest you know that we do not need to cover, but we will take them directly while preparing cash flow statement. So let's start with preparation of cash flow statement. I'm copying again the format from one of the previous questions. Okay. So profit before tax and extraordinary items is 3,86,000, right? So 386 will come here. To this we will add interest on 8% debentures, and that is rupees 20,000 interest payable on debentures. We will add depreciation on land and building. Land and building original or initial value was 4,03,500 and closing is 383,500. So 4,03,500 minus 383,500 is the amount of depreciation on land and building, and that is also 20,000. Then depreciation on plant and machinery, that we have already determined, and that is 1,35,000. We will also add premium on redemption of preference shares, which we have written off using statement of P&L. That is this one, 3,000 rupees. Premium on redemption of preference shares. The amount which has gone to P&L and has decreased our profits. We will subtract interest earned on 12% debentures of Tata Sons, and that amount is rupees 3,555. So this would be subtracted. Why? Because it has increased our income, being an income item. We do not have any amortization. We do not have, yes, we have profit on sale of machinery. That also would be subtracted, and its amount is 15,000. I don't think we have any other item, guys. Let me check it. Yes, we do not have any other item. So now with this, we will find cash flow from operating activities before changes in working capital. And that would be, let me use my calculator so that we could do it fast. 5,45,445. Now, items of working capital changes in which we have trade payables. which is increasing by 8,000. So it would be added. Then items of current assets. Here we have inventories increasing by 70,000, so it would be subtracted. And trade receivables are also increasing by 150, so they also would be subtracted. So the net changes in working capital is 150 plus 70, 220, 220 minus 8, that is 2 lakh 12,000 in negative. Our working capital has decreased by 2 lakh 12,000. This is what it means, guys. So cash flow from operating activities after changes in working capital is 5 lakh 45, 445 minus 2 lakh 12,000. That is 3 lakh 33,445. Right? Less tax paid during the year. The amount of tax that we have paid, that also we have determined, and that is rupees 7,000. Tax paid during the year. So with this, we have got net cash flow from operating activities of rupees 3 lakh 26,445. Would be marked as small a. The same amount we will write on the outer column, 3,26,445. Is it clear, guys, to you all?
Yes. Yes.
Uh,
हाँ भी.
सर इसमें कंफ्यूजन था मेरे को अक्रूड अपन जैसे इसमें लेते हैं तो अपन अक्रूड का अमाउंट इसमें इंक्लूड करते हैं ऑपरेटिंग में बट अपन फाइनेंसिंग या इन्वेस्टिंग में जब उसको
जितना कैश
अपन
फ्लो हो रहा है उतना ही लेते हैं वहां पे.
लेते हैं
यहाँ पे हम इसलिए इंक्लूड करते हैं कि इस अमाउंट ने प्रॉफिट या लॉस को बढ़ाया या कम किया है. अगर प्रॉफिट को बढ़ाया है तो उसको हम लेस कर देंगे, अगर उसने प्रॉफिट को कम किया है तो हम उसको ऐड कर देंगे. क्लियर? सो
समझ गया सर
यहाँ पे वो सारे अमाउंट्स आएंगे जो पी एंड एल में गए हैं, जिसने प्रॉफिट एंड लॉस में प्रॉफिट को अफेक्ट किया है. लेकिन इन्वेस्टिंग और फाइनेंसिंग में वो आइटम्स आएंगे जिसने कैश को अफेक्ट किया है. राइट? सो कैश फ्लो फ्रॉम इन्वेस्टिंग एक्टिविटीज, गाइस, परचेज ऑफ प्लांट एंड मशीनरी. We have purchased new plant and machinery of rupees 1,20,000. This one. We have also sold one old plant and machinery of rupees 50,000. So they both will come under investing activities. Apart from this, we have purchased goodwill of rupees 1 lakh, guys, because goodwill value is increasing by 1 lakh here. We have also purchased debentures of Tata Sons of rupees 39,500. So purchase of debentures of Tata Sons rupees 1 lakh. No, sorry, rupees 39,500, and purchase of goodwill rupees 1 lakh. 2 lakh minus 1 lakh, that is 1 lakh. And receipt of interest on debentures of Tata Sons is rupees 2,500. So this is inflow of cash. So this is 220, 220 minus 50, 170, 170 plus 39,500 is 2,09,500 minus 2,500, that is 2,07,000. This will come in negative 2,07,000. Let me check again, guys. 220, 259,500, 2,09,500, 2,07,000. Yes. Now cash flow from financing activities. Net proceeds from issue of debentures. We have issued debentures of rupees 1 lakh during the year. That is why they became rupees 2 lakhs from rupees 1 lakh. No, rupees 3 lakhs from rupees 2 lakhs. That means we have issued debentures of 1 lakh. These debentures were issued at a premium of 5%. It means, guys, by issuing debentures of rupees 1 lakh, we actually have received 1 lakh plus 5,000 on 1 lakh, that is 1 lakh 5,000. So net proceeds from issue of debentures is 3 lakh minus 2 lakh plus 5%, that is rupees 1 lakh 5,000. We have also redeemed debentures, sorry, preference shares. So redemption of preference shares. We have redeemed preference shares of rupees 1 lakh at a premium of 8%. It means the net amount that has gone out from our pocket is 1 lakh 8,000. Right? Interest paid on 8% debentures. The amount that we have paid on as interest on debentures is rupees 16,000. So this will also come under financing activities. Dividend paid to preference shareholders is 15,000 and dividend paid to equity shareholders is 36,000. This will also come under financing activities. So here we have net cash flow used in financing activities, that is C part is, this is 3,000 negative, 3 plus 16, 19, then 34, 34 in this 70,000. So 70,000 negative. Right, guys? So net of these three is 2 lakh 7 minus 70, that is 1 lakh 37 negative 130. No, no, sorry. It would be 277 negative. So 277, 23 plus 26 is 29. So 29, 277, 23 plus 26 is 49. So 49, 445 is net cash flow from A plus B plus C. To this, we will add opening balance of cash and cash equivalents, and that is 6,500. We do not have current investments here anywhere, so we'll take only this amount, 6,500. So this will become 55,945, and that should be our closing balance of cash and cash equivalents. And this is the case, 55,945. I hope, guys, you all have understood everything. If you have any doubt, guys, from financing or investing activity, you can ask. Abir, Falak, Ana.
No,
Abir, Falak.
no, sir.
So, guys, start noting it down from here. Taman, we are done with cash flow. I do not know why you could not join earlier. You start noting it down from here. Others also, guys. See, this I have written, guys, only for your understanding. This you should not include in solution. So, as of now, you note this down, right? You will write only summary of it as part of working note. So this I am marking in blue, guys, because this is only for your understanding. This would be part of your working note, guys. This is only for your understanding. Note down this, guys, everyone.
Yes.
Abir, Akshita,
Yes, sir.
Yes, sir.
complete this, guys, also, this part. Anna, Abir, have you noted down this?
Yes.
Sir.
Right, Abir?
Yes, sir.
So, guys, now you have to start noting it down from here. Guys, the meeting will get over in 10 minutes and I would not be extending it anymore. This is the final class of cash flow statement from my side. I have done many questions of cash flow and soon you would be given an assignment of cash flow. So I hope guys you all have noted down everything till here. Am I right?
Yes, sir.
Akshita,
Yes, sir.
Falak, Anna.
Yes. Yes, sir.
Okay, complete this guys, this part and this. Net cash used in financing activities. Here also net cash used in investing activities.
Yes, sir.
Everyone right?
Yes, sir.
Okay, so guys, that's it. Now you have many questions to revise. So far, I have done total 18 questions of cash flow and I have covered all the concepts. So you revise all these questions, guys, at the earliest. And once you receive its assignment, start working on that. Right? So that's it, guys, for as of now in accounts. I'm ending the meeting, guys. I hope you do not have any question. If you have, please ask me fast.
No, sir.
Akshita,
No, sir.
Abirana. Okay.